There has been a spike, I'm told, a spike in New Yorkers looking at real estate in the suburbs. Mitch Roschelle covers this kind of thing. Mitch, I've heard about this supposed exodus, but is it really happening? Have you really seen people get up and leave?
Well, first you heard it from me, because I said this a couple of months ago.
You did.
But it's true. And I was talking to realtors in the burbs, and they are seeing an uptick in activity. In fact, so there's actually more listings coming on the market because the market seems better and people are selling their houses. And who's buying it? Young couples from the 5 boroughs, or probably 4 boroughs, because I don't know if the Staten Island crowd is moving to the suburbs because they're already in the suburbs. But they're moving because they want to get the hell out of the city.
I'm seeing exactly the same thing in New Jersey.
New Jersey, yeah.
Just across the river. Whenever a listing comes up, there are bidders very, very quickly. And at least half of them are coming from New York City.
Yeah, and the ones that are lingering on the market in the suburbs, whether it be Bergen County or Fairfield County, Westchester County, or even Nassau County in Long Island, the ones that are lingering on the market are the ones where the asking price is just too high. Okay. But the ones that are priced right, sell them.
There seems to be a split in the Florida real estate market. How come Naples, I believe, is doing very, very well, but Cape Coral, they're not doing well? Why?
Well, I think they're completely different sort of wealth demographics that are moving there. You're finding the people who are buying in Naples aren't borrowing money. They're moving from the Northeast. They're moving from California. They're moving from a lot of Midwesterners moving there. And they're buying homes for cash.
They're taking money out of the stock market.
Taking money out of the stock market. They're maybe selling their home up north, wherever they came from, but they're buying houses for cash. The Cape Coral, Fort Myers market, these are leveraged borrowers, meaning they're borrowing as much as they possibly can. And that market, because interest rates are high, is suffering. I think the statistic was that 8% of the people who've bought are underwater in the Cape Coral, Fort Myers area. Let's remember, after the financial crisis, the hardest hit market in the United States was right there, Fort Myers.
Yeah. This is how I'm told people do it. You've run up a nice chunk of money in the stock market, and then you go to your broker, the brokerage investment firm, you get a loan from them using your stock market profits as collateral, and then you get a loan at a low interest rate. It's not a mortgage.
Right.
You get that from your broker, and away you go and you buy your house full cash. That's how people do it, isn't it?
That's how some people sitting around this table did it.
Yeah, it's true.
But what happened is the rates during the housing boom post-COVID were really low. Let's remember, interest rates were really low. So a lot of people were surprised. They borrowed against their stock gains at 2.5%.
Yeah.
That 2.5% was locked in for 2 years. 2 years came pretty quickly. And then they realized that those loans got resized to maybe 7%, which a lot of people freaked out about. But they forget the fact that if they were to go out and borrow with a traditional mortgage, it would be around 7%. Moreover, they'd pay taxes on all those capital gains
yeah.
So
getting
still better
a mortgage
off.
these days is like torture.
Torture.
Oh, covering all the bases, all you've got to fill in. All the rest.
I called it a financial colonoscopy last time I was on, and everybody rolled their eyes. So I'm not going to do it again.
But it was good. No, I won't steal that off you. Mortgage rates.
Yep.
The 30-year fixed rate loan looks to me like it's going back up to 6.5%, and that's not good, is it?
No, it's not good. Well, I'll tell you why it's good, because I think if interest rates were to come down considerably, let's say a point and a half, I think that would boom the housing market again, and we'd see prices starting to go up, which wouldn't be great for buyers. So it's kind of a good news, bad news situation. I think what most people don't understand is when the Fed cuts rates, it has nothing to do with the 10-year Treasury, which drives the mortgage rate. So I think we're going to find ourselves in a situation where we're lowering short-term rates and long-term rates just start going up as a function of the free market. So praying for low mortgage rates ain't going to happen.
Okay. All right, Mitch, that's all good news. Mitch Roschelle, good stuff. Thank you, sir.